Definitely, you could say the SPYs are in breakout mode, new all-time high. We've been talking about this for at least a week. Actually, probably since back here before we rolled over on that Trump BS. So, yesterday's morning meeting, we talked about the idea if we started to hold above 240, and then moved away, and we got to 240, 50-ish. That could be the beginning of the next leg. We closed strong. Anybody who went out long was rewarded with a gap higher. And now it's just a question of how much of a move we would look for. Some people would say, hey, there's no levels. In the morning game plan sheet, when a stock mix gets above the all-time high, we put none for resistance. But we do know that the market more broadly, that we can think about it in terms of percentages that people might be willing to kind of chase it higher. So the last breakout from the beginning of February took us from 229 to 233 in a few days, and then we continued higher for two larger days after that, where more people just piled on. It kind of accelerated. So that was like $6 there, which that works out to 2.7% or something. A pretty nice size move. So we'll watch to see if there's another $2 or $3. Now remember, this move itself started from 236. We had 3 big up days. We'll grind higher. So for 241 in the pre-market, 242 to 243 seems like a pretty reasonable target area for today or tomorrow if we're going to, the market's going to get bid up. If you're looking to get in, if you're not in yet, quick drop out on the open to 240.80 to 240.60. Yeah. What we've been looking at. IWM took out the priorities high yesterday, then came back down, closed right there at resistance, gapping a little bit higher. The way I'm looking at this now is flag 137.50 and 137 for support. And starts to hold above 138.30. That would catch my attention on the upside. All right, so we got a long list of stuff to go through. Let's start with Best Buy. Best Buy's up a ton. They crushed the EPS. The guidance was in line. That's certainly possible. You could see a decent amount of profit taking on this scenario. It's already run up a lot from last year. So here's kind of the uptrend. It had gotten up almost to $50, had a pretty decent pullback here to the low 40s. In this consolidation, we zoom in. So from December to end of March, basically mid 44 plus or minus a couple bucks, where we broke out. And slow, I guess very similar to the market. Broke out but didn't go up a ton. People accumulating it again at the highs in front of earnings. So looks like people were happy to hold it at the highs and buy it in front of earnings, which is pretty bullish. Here's what the weekly looks like. Had this huge runoff off the bottom to the 40s. They crushed it back down to 25. I'm sure we were involved down here at 25 a few times, a couple of years ago, 3 years ago. Rolled over again through 30. Didn't quite get to 25, but this was the spot to look to buy it again. And since it broke out above 40, there's been no reason from a longer term perspective really to be out of the stock. It's gapping up 57 bid right now. It's extended. So if we look at past times, it got extended. Flip off our chart basically. This was a small gap and they ran it under today. This is a huge gap. Let's see here. It went from 40 to 46 from the prior day. It's already up more than that in the pre-market, 57. It continue higher the next few days after that. It's going to be tricky here on the long side, I think. Let's take a look at the after-hours pre-market. So initial move did take it to 56. They supported at 55 in a quarter or so. This morning went up another $2. So I would think first thought would be to look for it on the short side here into 58, just because of the overextension. Not because they're not doing well and it's not in a strong longer-term uptrend. We're trading in a lower time frame. And a better probability play is looking at a short here for move back down to here. You can see people were waiting for that at 58 there. It gets up there, you get the nice red bar. Then it came off $1. Now it's a lower high. So basically 57.70 to 58 is a potential failure area. Pullbacks 56.70 and then 56. Should be able to trade both sides of this. Normally trades 3.3 million. They're on the conference call right now. Be prepared to be flexible. Don't risk more than 20 to 30 cents. You're trying to make $1 to $2 on something like this. The ATR is 94 cents. You very easily could have a $2 to $3 range. $2 range is the pre-market high, just down to 56. The next one is GME, just up a little bit in sympathy, and they also report after the close. This one's been nasty. And look at it, it keeps on gapping down, they buy it. It gaps down, they buy it. It gaps down, they buy it. It's trying a bottom. It's 23.60 this morning. It's it right here, above here. I'm kind of curious what it does today. So say it's up a bit here. It's gapped up. They actually crushed it a couple of days ago. Certainly, if they hit it right on the open and it came down close to 23, you probably want to scoop it up. I'm sure some people will try to buy it ahead of earnings after the close. Not sure. That seems like the likely path. 23.50 is the other spot to keep an eye on. Can't take it out, obviously, because if the numbers aren't good, it could gap down to $20 pretty easily. But playing it, potentially long in these areas, up to this area here, not bad. Next thing is AERI. This could be pretty crazy today. That's up $15. Their phase 3 trial was good for glaucoma. And the reason I put the actual disease that the drug is for, sometimes I'll just say phase 2, phase 1, phase 3, and I won't even mention, is, I've talked about this a bunch of times in the morning meeting, when the drug is for something that's a very large problem, a large potential treatment population, and it's also something that retail, just the average person in the market can understand. I think it's important to note that. So glaucoma, everyone knows someone with glaucoma. It's people, generally older people, get it in their eyes. My dog's actually had it for a couple of years. The pressure in your eyeball goes up. It doesn't maintain its normal homeostasis. That's the correct use of that word. And it's painful. So it can give you migraines. So people will understand this. It's now gapping above 50. I'm not sure if this was initial good news on the drug, and that's what got it to go from 20 to 30. But certainly since that initial gap, excuse me, above 30, it's been strong. It was accumulated the last couple of weeks in the high 30s. I would imagine some people will be incentivized up here to take profits. Let's look here on the 5-minute. It's yesterday. So news came out, it went to 52.5, came back down to 50, which is going to be your natural level where people will bid for it. And now it's higher, so it's dicey up here. They are holding the bid, and it's done 400,000 shares in the free market, which is what it normally does in a day. So that's not chump change. On the other hand, what's the short interest here? 9.5%. So there's a decent amount of people short this. They're kind of screwed at this point. That sometimes can create a top right on the open. Maybe it pops up on the open above the pre-market high another dollar or two, and we get one of those moves, $3 to $5 pullbacks. It's going to be a wild ride. That's why I didn't put it first, even though the news is big and it's up a ton. I would say first thing I would do is watch to see if it gets below the support from right now in the last 30 minutes, which is around 54.80. If it does, very quickly can drop $2 to $3 into this area right here. And once it settles down, you can watch to see if it kind of forms a base and starts to curl back up, because the news was very good. It's going to lead to them either making a lot of money or probably getting acquired. So that's kind of the scenario there. So dangerous right on the open a little bit. It certainly flashes higher, then starts to reverse. A short against the high for $2 to $4 pull-in makes sense. And then we'll see after that. It does one of those nasty biotech full reversals. And if I put on here, it's going to be a thick stock, very little risk for less experienced traders. BBY would probably be my first choice for less experienced traders, but it can be a little nasty on the open. But ANF, a lower price stock with a tight spread, you're not going to get hurt here. It's another name. We've seen this pattern during the most recent earnings season, where just very beaten down name stocks that were $30, $40, $50 that are between 10 and 15. Kind of the news looks like they're stabilizing, things are getting better, and they can catch a bid. And you look at the EPS number, when a company like this is like restructuring and losing money, that's not really the important number, because they're negative 20 cents or negative 50 cents doesn't really matter. What matters more so is are the revenues stabilizing. In this case, they beat the revenue numbers, I think, by a few percent. That's why you saw the positive reaction. And after going to 1350, it had a pretty nice quick pullback here, but was scooped up. And then this morning, it was above 13 and a quarter. If they're going to buy it up, this area up here, it's kind of what we're looking at. $13.80 to $14. It actually looks like it might go there before we get to the open. And then we'll see. Now, it gapped up a few weeks ago to $15, and they hammered it. They had a strong revert. I mean, this is crazy, actually. It's hammered. They scoop it right back up because people think this is the bottom. And then it just slowly bleeds out for the next 7-8 days. Fills the gap. How many of these people got long up here and into this are now happy to sell it into 14? Probably plenty of them. So if it pops up to 14 on the open, my first instinct would be to short it. Buy it. I'm willing to buy a buyer closer to $13. They're on the conference call right now. SIG. I don't think I've traded this since it was like 150 or something. So they're having problems. You know what? Maybe I shorted on this day here when it was gap below 70. I'm pretty sure I participated in some of these crazy down moves. Could be shorted on this gap up to 100. But anyway, it's come off from 150 down to 52.80 bid right now. So it's erased this entire move from the last few years. When I traded it, it was just completely wild. So even though it trades over 1 million shares a day. It reminds me of DY from yesterday a little bit. In terms of DY, the news isn't as bad maybe as DY was, but like short the pops, we shorted the pop in DY, like crushed it on the open. It was a very easy trade. In this case, they bounced in here from 49.50 to yesterday's low. almost yesterday's low, and it failed. The only caveat is it's already down 65%. So it's possible that this could be the bottom here, but let's see what happens here at 53 to 53.30. And if it fails there, play it on the short side, start to hold below 53. Maybe it makes a higher low. The low in the pre-market was 49. Then it made the higher low at 50. Maybe it makes a little bit of another higher low at 51. That's my thought there. They appear to be on the conference call as well. So first two names from the morning meeting yesterday worked very well for me. Those of you who are kind of following along on real time. The first idea on this one was just to see if there'd be some profit taking from the 140 area. It did, and I don't remember exactly where I got flat, but we talked about it failed at 140, maybe we come into this 138, overshot that. I think I got flat into 137 maybe. It did pop back up here, and the interesting thing about it is after the initial profit taking, higher low, and it consolidated for a while, and I think we've talked about this a bunch of times recently. After you get the reversal and the consolidation, which way does it break? If it breaks to the upside, maybe it's just going to keep going. If it breaks to the downside, that's a good short too. It did come off a buck and change, or even almost $2 from this kind of break from 39 here. So there was some money there. And the rest of the day didn't really do anything. It just kind of kept on narrowing. You kind of see that better on the 30-minute. So for today, I put the support down here, the morning support, 36 to 37. You could use 38 as an inflection, potentially, for a move back up to 40 or a move down to 36. But I'd continue to watch it. It's fairly liquid, so there could be some good action there. DY I just referenced earlier, shorted in the pre-market to 93. It did get above there when the market opened, but then they crushed it. We talked about 88.50 being support, I believe, longer-term support, and it held that. Right on the open, it crushed through, but then it held that the rest of the morning. And it closed right and tried to go through at the end of the day, and it closed above. So, I guess the way I look at this now, 92, 93 resistance, 88 to 88.5 support, starts to move outside of the range. You look for another leg. ALNY. So ALNY was the toughest of the four things from the morning meeting for me, mainly because the announcement of the secondary, I didn't think it would go much below $70. Now it obviously had a nice reversal and went all the way back up to 71.5 or something later, but my thought was 670 to 69 should be enough of a sell-off from $75 the prior day, thinking they priced the secondary above 70. And it was dicey. I actually sold aggressively when it started to reverse, so just to make sure if this reversal failed, that again crushed, getting stopped out. My stop was down here. I was off the desk for this entire reversal basically, and I think I had offers up into $70 to get flat. Would have definitely traded it differently if I was on the desk. Let's see. I think once it had this strong reversal bar here, certainly you could have bought into this reversal bar. And then when it started to consolidate at 69.5 and broke to the upside, if you wanted to, again, try to add to that to see if it worked its way back up to the opening price of 71.40. And that was very clean. It rolled back over, did a retest of 70 again, did a retest of the high again. So it was very tradable. After the overshoot to the downside, very solid reversal, very normal trading pattern the rest of the day. So there was definitely good money there. Looking at it today, I was conservative here with my support. I put 68.5, maybe even 69, makes a higher low. And continue to play, resistance 71 to 71.5. As we get closer to them pricing it, you could see some funky moves. If Ford gets out there pricing it below 70, that's what could cause some pressure for it to come down.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.